Fair Tax webinar, and I am a volunteer in Central Florida for the Fair Tax effort, and I'm joined by my great colleague, my incredibly knowledgeable colleague, Mr. Larry Walters, who's a district director here and has been instrumental in helping spread the fair tax message throughout Central Florida and beyond. So we're excited to have him, and I'm looking at the attendee list and I see a number of other familiar faces, including another one of our great supporters, David Leake. So welcome, Dave. Glad you're here. And there's a whole bunch of other people I could say as well, but thank you all for joining us. We had a great representation this month, several hundred people signing up representing just about all 50 states. And that's really great because obviously that means that this message is spreading. And we're going to talk a little bit later on in the presentation about what you can do to help spread this message, because one of the things that is important is not just to get educated, but to step up and let others know about it and take a real active in about 30 seconds. But I just want to welcome everyone to the National Fair Tax webinar. And again, if you're just joining us within the last minute or so, my name is Mark Maneri, and I'm joined by my colleague Larry Walters. We're both volunteers here in Central Florida, and we have been bringing this to you for over 3 years now. So we're excited about the expansion of the webinar. It's a wonderful way to educate people in the comfort of their own homes, and we will challenge you to bring guests next month. All right, so let's go ahead and get started. Larry's going to hit the record button, and we will record this webinar and have it up online for those folks that couldn't join us tonight. All right, so with that said, when I talk about the fair tax, you know, one of the things that we say about it is that it is simple, it is fair, and it is transparent. And what's crucial to look at now is that our tax code is anything but simple. And you'll look at this graphic on the screen right now, and as you can see towards the bottom, if you roll your eyes down to the lower right-hand corner, that we're actually past 75,000 pages of our income tax code. I mean, it's absolutely ridiculous. And you know, I always like to say that one of the things that has made historically America so great is that we've been leaders in evolving our, let's just say, our citizenship. So, you know, certainly we look at that in human rights. We've evolved in giving equality to women and to African Americans, and on and on and on. And yet here we are in this position where economically we're no longer the #1 superpower in the world, and we all know that, and we're moving in the wrong direction. And by altering our tax code, we can evolve economically as a country, because what the fair tax will do, and you'll see this much more clearly as we move through this presentation, it'll allow all the citizens of this great country to evolve economically and move ahead financially for themselves and for their families. So, in fact, one of the things that we say is that, you know, one of the greatest risks of not implementing the fair tax is that another country is going to do it before us. So we've got to evolve, and certainly the way to do that is through the fair tax, and that's what we really want to show tonight. So the fair tax is legislation that exists right now, and the two bills are named in the House and the Senate, as you can see below. And so let's talk about exactly what the fair tax is. It's very simple. The fair tax will eliminate all personal and corporate income taxes, all tax withholdings for Social Security, for Medicare, capital gains taxes, self-employed. All of these taxes that you see up here on the screen go away, and they will be replaced by one national retail sales tax. What that means is when you buy a new good, emphasis on new, because you can see the check mark at the bottom, used goods are not taxed under the fair tax system. All new goods and all services will be taxed to the tune of 23 cents out of every dollar spent. And there's no taxes on business-to-business transactions, as you see also below on the check mark. So just a simple example that I use every time, but to me it's just such a good one to illustrate how the fair tax works, is the example of a new home construction. So if you think about it, you've got a business, and this business is a construction company. They build brand new homes, right? So when they buy the hundreds or even thousands of inputs that go into building that home, the bricks and the siding and the copper and the land and the electrical outlets and everything that goes into building that home, the fair tax is not levied on that. It's the business-to-business production costs. It's a business-to-business transaction. When that home is completed and it goes up for sale and it sells the very first time, that's considered a new good, right? And when that's sold to the consumer, when they pay the price of that home, essentially the fair tax is included in the price of that home, and that consumer pays that. Now let's actually use an example, and for numbers' sake and simplicity purposes, let's say that home costs $100,000. Well, the fair tax is inclusive of price tag, and what that means is when you buy a brand new home in this case, or you go to the mall and you buy a brand new pair of designer jeans for $100, when you close that home transaction, you don't pay $100,000 plus 23% or $123,000. Or at the mall, you don't pay $100 plus 23% added on top, or $123. No. You pay $100 for that pair of jeans. The fair tax is embedded in it. You pay $100,000 for that brand new home. The fair tax is embedded in it. And every single time that business, and every business, when somebody purchases their service or brand new good, that business is responsible for setting aside 23% of that revenue, and every single month they will tally up their gross receipts. They'll take 23% of those gross sales, and they will pass that on to their state revenue department, who will then pass it on to the Department of the Treasury. All right, so that is, in really, really simple terms, how it'll work. But it's important to understand that what the fair tax is. So again, we're going to eliminate all taxes that we know of today. Personal income taxes, corporate income taxes, Social Security, Medicare withholdings, estate tax, capital gains, alternative minimum, all those taxes go away. We replace it with a mandatory, or excuse me, the mandatory taxes go away. Actually, a volunteer, if you will, retail sales tax. And the reason we say volunteer is because you could purchase used goods and not be subject to the fair tax, which is a real benefit, especially for lower income class Americans. All right? So that's what it is. Now let's look at our current pricing system. Essentially, right now, we're not only paying in income taxes, but we're really getting double taxed. We're paying an income tax, and really we're paying a sales tax, a retail national sales tax. Why? Because every time we purchase a good, ultimately we're paying for the business's income taxes. And we call that the embedded tax. And across all industries, it averages about 22%, as you can see on the second bullet point there. So let me explain this a little bit further. If you're just joining us for the first time and you're just getting enlightened to the fair tax for the first time, which we know there's a number of people on this line that is the case. When a business, let's go back to that designer jean example. So they want to sell designer jeans, and they're going to put a retail price tag on it of $100. All right? So right now, under our current income tax structure and our current pricing system, of course, the business has costs, right? They've got their overhead, and they've got fixed costs and variable costs. Well, one of the line items that goes into their costs before they can figure out what to price the darn thing in order to make profit on it are their corporate income taxes and the costs associated with complying to the federal tax code. What might those costs be? Well, paying an accountant to do their taxes every year. In many cases, depending on the size of the business, they'll have to hire people and keep them on staff all year long just to figure out the tax implications on their business, right? So not to mention all of the hours and the time and the labor that goes into just thinking about tax implications. So that is a line item expense on a business's profit and loss statement, right? And so we suggest that that embedded tax is approximately 22% on average across all retail businesses in all industries, right? Now, what will happen essentially is that when the fair tax gets passed, that 22% embedded tax goes away. Why does it go away? Again, because corporate income taxes go away, which means the costs associated with complying to the corporate income tax system goes away. We don't have to pay an accountant any money anymore to figure out our taxes because there aren't going to be any corporate income taxes, right? So the only thing that a business has to do is fill out one form where they literally look at their gross sales for the month, they multiply that times 23%, they get a number, and that number goes to their state sales tax bureau, all right? And so basically what's going to happen from a pricing standpoint is the embedded tax is going to come out, the fair tax of 23% is going to go in, and we will almost have a wash. Why do I say almost? Because prices are going to go up marginally by maybe 5 to 10% to start with. And then as businesses see that they've got the same margin to work with and that their sales are not only going to be stable, but they're going to grow, and we're going to show you why they're going to grow in just a minute. To get more competitive and to win more market share and more customers, they will lower prices over the next year or two, and prices will come back down to pre-fair tax levels. All right? So really important to understand what it is. Very simple. We talked about that, and we talked about our current pricing system. Important to understand that embedded tax comes out, the fair tax goes in. We've got a relative wash. Prices are going to remain relatively stable. They're going to go up maybe about 5% or so, but now think about this. The average American's income is going to go up by 29%, ladies and gentlemen. It's huge. The average American's income will go up by 29%. We will have more disposable income than we've ever had before, and that is going to bring a windfall into this country economically, and we'll talk about that in just a second. So we talked about simple. The fair tax is very simple. Now let's talk fair. The fair tax is fair. Why do we say that? We say that because, first of all, right now only 50% of Americans actually pay income taxes. Just about everybody knows that, but that's the truth. Well, when the fair tax gets implemented, every American, every single American is going to pay taxes, but they're going to pay their fair share. Now, what do we mean by that? Well, number one, what we mean is that the more money that people make, the more they're going to spend. And so you pay taxes based on the amount that you spend instead of how much you earn. And that in itself is extremely fair, and it's also progressive. You pay more as you spend more. All right? Now the second half of that is the prebate. The prebate assures no one pays federal tax up to the poverty level. Now what do I mean by this? The Department of Health and Human Services inside the federal government, independently from fair tax or from any department of the government that has to do with taxation, the Department of Health and Human Services has determined poverty level spending thresholds based on the size of your household. And what that means is, if you, for example, look at this chart and go to the right, a married family household, let's say with 2 kids, so bring family size down to 4, at spending $29,420 for the year, that is poverty level limit spending. So the Department of Health and Human Services suggests that if a family of 4 is spending only $29,420 a year, they're spending at the poverty level. In other words, about 100% of that money is going towards food, shelter, clothing, transportation, and medical supplies, the basic necessities of life. And when you start spending over that, then your spending now goes above the poverty level limit spending. So if you multiply 29,420 times 23%, the fair tax rate, you get essentially you're going to pay $6,767 in fair tax, right? Divide that by 12, and you'll pay $564. Well, that's poverty level limit spending, folks, and the federal government is going to reimburse you at the beginning of every month the poverty level limit spending that you spent on the basic necessities of life based on your household. So every month, a married family of 4 will get direct deposited into their bank account $564, right? And the reason why this is done is to assure that nobody is getting taxed in a way that is burdensome to lower income class Americans, or all Americans for that matter. In fact, this prebate comes into every qualifying household regardless of income, right? So you can make $30,000 a year, you can make $30 million a year, but as long as you're holding a valid Social Security number, you're going to get, a married family of size of 4 is going to get $564. Really important, because especially to understand that there are a lot of opponents of the fair tax, not because they think the fair tax is actually not good for this country, it's just an easy way to misguide the American public on the truth about the fair tax, and they'll take an opposite position, and they'll run against an opponent that says, who's in support of the fair tax, and say, well, my opponent wants to raise taxes by 23%. Well, you know, they're obviously not also, they're purposely not saying that, by the way, all of your income taxes and your capital gains taxes and your federal income tax withholdings are going to go away. But at any rate, it's important to say that, know this, because demagoguers of the fair tax will tell you that it's really bad for lower income class Americans and for the poor. It hurts them financially. That couldn't be further from the truth. Number one, the average American's income is going to go up by 29%. And that's based on the majority of Americans whose income is below or is at the 15% taxation threshold right now, which is the majority of Americans. So not only do they get to keep their entire paycheck and their income goes up by 29%, but they get the prebate, which is a brand new revenue stream into their household every month. Prices are going to remain relatively the same. They're going to go up a little bit, but they're going to be making a lot more money, so that's better. And they can choose to buy used goods. All right? So the prebate ensures fairness, and Americans are going to realize a windfall. And that's a good segue into our next slide, which talks about financial benefits. So first of all, right now it's estimated that there's $11 trillion in offshore wealth by wealthy individuals and corporations that are just parking their money there, shielding it from good old Uncle Sam. And when the fair tax gets implemented and corporate income taxes and personal income taxes and capital gains taxes go away, that money can now flow back into our economy untaxed. And guess what wealthy American and business owners are going to do with that money? They're going to do with it what they know best. They're going to reinvest in their business. They're going to expand their businesses. And what does that mean? They're going to hire people, and more people are going to get jobs, and unemployment is going to be at an all-time low, and more people are going to be making more money and have more disposable income. And guess what Americans do with their money? They spend it. Don't we? We spend it, or some of us will invest. Very few will save. But if we save, isn't that a good thing too? Right? So we spend more, which means we're spending more money at retail outlets. Businesses continue to grow, and we've got this amazing, awesome cycle that propels us forward economically in a powerful way, right? Second bullet point, U.S. becomes a corporate headquarter haven. Why? We'll have the lowest corporate income tax structure in the world, 0. So companies will relocate international headquarters here. They will build buildings, infrastructure will grow, they'll hire staff, more jobs. That just adds to what I just said. Thirdly, underground economy. Illegal immigrants right now that aren't paying taxes. Tax avoiders, drug dealers, you name it. Criminals that are avoiding the tax system right now, every time they go and buy a new pair of shoes, a pair of designer jeans, a new car, a new house, whatever, they pay their fair share. So it's fair, and we absolutely rocket this economy forward because we are not going to be burdened with our current tax system that penalizes us for earning more and for growth. That is the wrong way to inspire growth. All right, one of the things that I've learned being a business owner is that one of the best ways that you can inspire behavior is how you compensate. So you compensate by paying more as people work harder. Well, we're doing the exact opposite with our tax system right now. We're saying if you work harder and make more money, we're going to take more of your money away. So don't grow. We're not going to inspire you to grow. That's what we're doing with our tax system right now. So the fair tax reverses that and gets us moving in the right direction. So it just makes so much sense. All right. So I alluded to this earlier, but how is this all going to work and how are we going to collect it? Well, 45 states currently collect a state sales tax right now, so that infrastructure is largely in place. And so there will be a state sales tax bureau created, who will be responsible for collecting, second bullet point, 18 to 20 million businesses instead of 120 million households. So instantly, we get 80% more efficient in our tax collection system. Right now, the IRS, which costs $10 billion with a B to run every year, it costs them 25 cents for every dollar they collect. Super inefficient, right? So we get a lot more inefficient right off the bat. And again, the businesses only have to fill out one state sales tax form, figuring their gross receipts, multiplying by 23%, and that number and those funds get wired off to their state sales tax bureau, who then passes it on to the Department of the Treasury, who then incentivizes financially the state sales tax bureau with 0.25% of all the revenue they collect to effectively enforce the fair tax. That's how it's going to work. All right. So we've talked about simple. We've talked about fair. Now let's talk about transparency. Who opposes the fair tax? You're looking at it. Lobbyists and politicians mainly, of course the IRS, because the IRS will be defunded over a 3-year period and it will go away. And now let's just talk about this. Why do lobbyists and politicians not want the fair tax? Well, one thing is transparency. I mean, think about it right now. If a congressman or woman, if they want to appropriate funds and approve some pet project for their district, they have to find a way to pay for that. Well, what do? They manipulate one of the 75,000 pages in our current income tax code. And they just do it. And we never know about it as citizens who are supposed to be holding their elected officials accountable. We could never know about that. Well, with the fair tax, totally transparent. When you go to the mall and you buy those designer jeans and you buy them for $100 and you see that the retail value of the jeans were $77 and the national income taxes, federal income tax you paid were $23 at a 23% tax rate, well, if that number goes up to 24, 25, 26, 27, guess what? You're going to know what's going on. There's total transparency. And you're going to get on the phone. And you're going to call your elected official and you say, I don't think so. You better roll back that rate or you're out of a job because I won't support you. Right? So That's the political incentive for not changing things. They're being able to hide behind the current convoluted tax code. And of course the lobbyists, 50% of lobbyists are tax lobbyists. And get this, guys, get this. There's a study done. For every dollar that a corporation pays a lobbyist to alter the corporate income tax code in the corporation's favor, it returns $6 in corporate income tax savings. So the lobbyist who's put on a hefty 6-figure or 7-figure salary, if the fair tax gets passed, 50% of them can be out of a job. And they don't want that. So what do they say to their politicians that they're lobbying? Don't support the fair tax. Won't look good. It's risky. And by the way, you can forget that $100,000 we're going to dump into your reelection campaign if you support it, right? That's how it goes, guys. That's what happens behind the scenes. So we've got to educate people as to the value of the fair tax and what it's going to do for every individual citizen, how it benefits them, and how it's going to benefit this country. It absolutely will. Right? So we got to get educated. And one way to do that is by being on this webinar every month. Another way we could do it is by reading. And there's a couple of great books out. You're looking at the second fair tax book that was put out by Neil Bortz, national syndicated radio host, who's now the official spokesperson for the fair tax, and former Congressman John Linder. This is a great book to purchase and send your elected official. It's a great to buy for gifts at Christmas time or for a birthday gift. Get people educated, all right? All right, so what we're going to do right now, we've given you an overview of the fair tax and its main points. And what we want to do right now before we hit our special topic is we want to take questions. So I'm going to go ahead and pull up my questions here. So give me 1 second. And I'll ask my colleague Larry to unmute himself as he is a wealth of information. And we'll get him on the hot seat. So you ready to go, Larry?
Sure am, Mark. Go for it.
Okay, great. So we got a bunch of questions here. We'll go through some of them right now, and then if we don't get to all of them right now, we will do our special topic, and then we'll come right back and we'll answer any remaining questions. All right, so this question comes in from Gary, and Gary asks, how are current assets, houses, cars, investment accounts, etc., handled since they have been heavily taxed previously? Larry?
Sure enough, Gary, thanks for the question. As Mark had pointed out earlier in his presentation, used goods are not taxed under the fair tax system. So the current assets that you speak of would not be suffering, if you will, under the national sales tax when they are resold. One of the goals or one of the foundation points of the fair tax is that goods or services be taxed only one time, or to put it another way, we will eliminate multiple taxation that we have suffered under with the income tax system. So to answer your question, they are not taxed when they are resold, Gary. Thank you.
Yeah, good one. Thanks, Larry. All right, so Karen asked the question, so if I'm married with 0 kids and make over $100K, I would still get a prebate of $417 a month. The answer, Karen, is yes, assuming you hold a valid Social Security number. I assume you do. And that money would come into your household. The bottom line is fairness, Karen, and it's about reimbursing all Americans for the money that they spend on poverty level limit spending. Or excuse me, yeah, for the taxation they pay on the money that they spend up to the poverty level limit. And so to support fairness, that should be distributed across the board, not just to lower income class Americans, right? So simple answer, yes, you would get $417 a month into your household every month, reimbursing you for your fair tax levied on you for your poverty level limit spending. All right. Let's see. Tom asks a question. will the fair tax affect the $21 billion in refund fraud? I assume what you're referring to, Tom, is that right now when fraud is, and I didn't know that number, but I assume what you're referring to is that when Americans file for their tax refund and the government pays it out, $21 billion of that is fraudulent. The answer to that question is absolutely it will affect it, and the reason why it's going to affect it is that there's going to be no refunds. You don't file, nor does any American citizen or household file for a refund, because income taxes and income tax withholdings by default go away when the fair tax gets implemented. So you as a citizen or you as a household, you don't file taxes ever, ever. And hopefully that's ringing in your ears and it's music to your ears. And by the way, when I got introduced to the fair tax, when I first got introduced to this and I saw this, I was blown away. And obviously it makes a lot of economic sense, but when I heard that I don't even have to think about tax implications and I don't have to deal with filing taxes every year, that's a win in and of itself, right? So that's the answer to that question. Yes, it's going to affect it because there's going to be no more refund fraud, because there's going to be no more tax refunds, because there's going to be no more tax filings by citizens and households, right? So, Larry, anything else you add to that?
No, that's fine. You covered it all, Mark.
Great. Okay, Peter asks a question about the prebate. So Peter says, I'm confused on the prebate and what it has to do with the poverty level. Does everyone get the monthly prebate or only those who consume up to the poverty level? If everyone gets it, then elaborate how it helps the poverty level folks. Is it because they pay 23% in consumption tax, but then get reimbursed each month and therefore pay a zero tax rate? That is true, Peter, but I'm going to defer to Larry, who's going to answer that question for you.
I'm sorry, Mark. I was looking at the fact that Peter had a hand raised, and I didn't listen to the question.
Okay, that's all right. One more time. It's a good one, actually. Really clears up the prebate. So Peter's wants to know about the prebate, what it has to do with the poverty level. Does everyone get the monthly prebate, or those who consume up to the poverty level? If everyone gets it, then elaborate on how it helps the poverty level folks.
I got it. Sure, thanks. And I'm sorry for missing that initially.
No problem.
Peter, that is a good question, but if you think about it, even though everybody gets the prebate, or everybody who qualifies is entitled to get the prebate, it has the most effect on those who are living at the poverty level. The poverty level is established by the Department of Health and Human Services each year, and all it is a dollar amount that they claim that they find a person or a family of some size would have to spend in order to have the basic essentials of life: food, clothing, shelter, things of that nature. So even though everybody is getting it, the fact that people living at the poverty level are getting a refund on the first 23% of their poverty level for their family size, it means that they have a zero tax liability for that first amount of spending. And it's just a bigger help to them than it is to somebody who's making $100,000 or $1 million a year. And I think you can see that relationship based on income and how much the 23% poverty rebate will mean to a lower income person. Thanks, Peter.
Yeah, perfect, Larry. Thanks. All right, so Robert asked the question, are services taxed? For example, monthly utility bills. Yes, services are taxed. And the reason why services are taxed because, in essence, it's the first time that that is being delivered to the consumer, right? So if you put it in the frame, if you frame it as a good, when a new home is built and it's sold to the consumer for the first time, then the consumer pays the fair tax. What I failed to mention earlier in that example is when that consumer lives in the home for, say, 7 years and then they resell it, the next consumer who buys it, they do not pay the fair tax on that. So all used goods are not taxed. But Larry, do you want to explain, specific to, for example, a utility bill?
Well, I don't know exactly what you're asking for, but utility is a service that you are paying for. Uh, I would suspect that the tax, and that's a good question. As I'm thinking about it here, trying to answer this, I would expect that the service, the tax on the utility bill will be on the service that is provided, not on the actual utility itself. So if electricity, for example, is costing you, let's say $1 a kilowatt hour, the tax won't be on $1 a kilowatt hour. The tax will be on the amount it costs in the service or for the utility company to provide that service to you. And that's something we're going to have to look into to get more clarification on. I don't have a better answer than that, and if it's not clear, I understand why, and I apologize, but that's the best I have for you at the moment.
Yeah, I think that's pretty good, Larry. And again, to put that to numbers, so let's say your utility bill runs you $100 one month. Well, what Larry is suggesting is that inside that $100 is not just the cost necessarily of the electricity itself. There's all the costs to run that utility company divided by all of its customers. And so per se, there's a percentage of that $100 that is the service that it costs that utility company to provide to each individual customer, and the fair tax would be levied on that percentage of the bill rather than on the whole thing. Yes, Larry?
Not exactly. It would be levied on what it costs the utility company to actually provide the service. And so that's the clerks and the management that they have in place that are required to provide that service to you at your location.
You know, maybe actually a couple people writing in, I think they have a good point. Utilities providing electricity, water, gas, etc., the electricity itself, the water itself, the gas itself are actually products that you consume for the first time, so perhaps it would be the entire bill.
That's true, and that's an excellent thought.
Yeah. Thank you, John and Donald. Okay, let's do this. Let's take a couple of more, and then we will hit our special topic, and then we will come back to finish up any other questions. All right. Brent asked a question, what about prebate fraud? Is there prebate fraud, and how would you handle that? Larry, do you have a stab at that?
Yeah, there's certainly going to be some people who do not tell the truth when they submit their form each year to qualify for their prebate. For example, there's only 3 members in the household, but they say there are 6, so that they'll get a larger prebate. One of the benefits of the fair tax is that it's going to be administered by the states as opposed to the federal government. And the states are much closer to what's going on tax-wise within the businesses that they are responsible for collecting the tax from. If they are dealing with a household that is fraudulently submitting a claim for the prebate, I don't know exactly how they're going to detect that, but what I do know is that because they've got much fewer numbers of people to enforce the fair tax on, that they've got a better chance of getting to that. And once again, you guys have got some good questions. That's another interesting one I'm going to have to look into further. How are they really going to be able to manage somebody falsely submitting a prebate application? Thanks for the question. Sorry I don't have better answers for you tonight.
Oh, you're doing all right, Larry. All right, let's do this, everyone. We're going to jump to our special topic. It's an important one. And in fact, there's a couple of questions about, you know, what do we need in terms of a grassroots movement, and how do we get this thing passed? All right, so let's talk about that right now. And that really is part of what our special topic is going to relate to. And so the special topic is, how do we actually get this legislation through the House Ways and Means Committee, get it debated, get it supported, so then it can be passed on to the Senate and we get congressional support for this thing? How do we do this? Well, the high-level answer is that we need grassroots support. We need influence. We need a certain percentage of people in in a certain percentage of districts around the country to speak up to their elected official and basically say, we support the fair tax. We're making it our highest priority when it comes to voting in office at the next election. And if you are not only in favor of it, but becoming a co-sponsor and will vehemently get behind it and try to influence your colleagues to do the same, we will not vote for you. And that's the kind of communication that we need through grassroots. So what we're doing right now is we're attacking, but rather than just doing it at all congressmen and women at large, there's a campaign to put pressure on and educate the members of the House Ways and Means Committee. Okay, so let's talk about that. All right, so the goal is very simple: to contact the Ways and Means Committee members, encouraging them to vote H.R. 25 out of committee for objective discussion and debate by the entire House. That means it comes out of their little committee and it goes to the floor where the entire rest of the House of Representatives can actually debate it, right? So how are we going to do that? Well, we've got a strategy. So there's 39 members of the House Ways and Means Committee, and there's a national district targeting plan. So those 39 members are made up of congressmen and women in certain districts around the country. And so what we've done is we've identified the districts that those House Ways and Means Committee members are in, and we're taking a specific laser approach to put support, communication, and bring education to that congressman or woman so that they can all come back to all 39 of those members can get educated at the same time and be influenced at the same time. Now, for example, in Florida, there's only one Floridian that's in Congress that is a member of the House Ways and Means Committee. Okay, and that is Congressman Buchanan, and he's out of Florida District 16. And the Florida Fair Tax Educational Association, which is basically the Florida entity of the Americans for Fair Taxation, it's the Florida contingency of the fair tax support, have done a marvelous job of communicating with Congressman Buchanan and have basically said the people in your district, they want to see the fair tax passed. And so what we want you to do is we want you to really learn about this. So what we've done is we've put together a debate. And what that debate is we're debating the fair tax versus the flat tax. And that is actually going to happen in Sarasota, Florida on March 29th. And nationally syndicated talk show host Neil Bortz, who's author of the books I showed you earlier, he will be arguing on behalf of the fair tax, and there will be a representative arguing on behalf of the flat tax, and Congressman Buchanan will be moderating the debate. So basically what that means is, as Neil Bortz and his counterpart are arguing, Congressman Buchanan will be learning and asking relevant questions so he can get more educated. And the point of doing this is a really soft approach, right? So we're not just going at him and say, just support it. We put together a debate that brings both fair tax and flat tax, two alternative tax measures, to the table and getting him educated. So it's a really, really intelligent way of doing it, and Florida Fair Tax Educational Association should be commended for helping to put this together, right? So again, at the end of the day, this was done with constituency support, grassroots support. After this idea was put together, constituents in that district that are fair tax supporters in the database were contacted, and then they went out in droves and wrote and did postcards, and they called, and they did faxes, and they did emails saying, we want you to moderate this, and we want you to be at this debate. And there was enough support, there was enough noise that was being made to light a fire under Congressman Buchanan to get him to the point where he said, all right, I'll do it. Right? So that's the point. We got to make noise. But this is the National District Targeting Plan, and so this activity is happening in other districts of the 39 members of the House Ways and Means Committee, and that's exactly what we're doing to try to move this thing forward from this angle. Right? So I do want to give my colleague Larry a chance just to share anything he'd like to suggest around this plan or the special topic. Larry, anything you want to cover?
Nothing in particular, Mark. It's a simple project that we're on, even though it's going to take a lot of effort, and it's quite unique if you think about what's being done and how we are drawing these various congressional representatives into a position where they're going to learn what the fair tax is really about and how it compares to the more favorable flat taxes that have been presented to this point in time. The thing for us to remember and to acknowledge is that every flat tax proposal that has been offered is literally a tax on income. Even though they say it's going to be flat initially, it won't stay flat for a very long period of time at all. The only way we can get rid of that is by repeal of the 16th Amendment, which the fair tax does, and it's the only tax proposal that does do that. Us as fair tax supporters need to take a little extra initiative to contact these various representatives, whether it's by email, or by telephone, by fax, it doesn't matter, and just put a couple of bullets of positive notes about the fair tax in your message to let them know why you think it's a good thing and why they should support it, and that you're expecting them to support the fair tax legislation, H.R. 25. Otherwise, they are not to expect support from you come their next election attempt. And it's a matter of putting a little pressure on them for their positions, because what good is there having another income tax passed if these guys are not voted and reelected into office? They don't have the position to take advantage of the special rewards that they get from special interest groups, the benefits for campaign contributions and things of that nature, if they're not getting the vote from you and I. So we have to use the power we have, which is our vote, and this district targeting plan is how it's being done. There is an easy way to find out who your representative is if he's on the Ways and Means Committee, and that's just type into Google House Ways and Means, and okay, Mark brought it up. I'll quit at this point and let Mark continue, because he's got what I was about to talk about. Go ahead, Mark.
Okay, perfect, Larry. Yeah, so you guys can see here we've got 2 slides of all the members of the House Ways and Means Committee, all 39 of them. And as Larry said, you could just Google it. But if you want, you can email the webinar confirmation email you got. If you reply to that, I'm happy to send you a copy of this presentation, and you can just look at it. But at the end of the day, if you live in a district where your congressman or woman is on the House Ways and Means Committee, you've absolutely got to reach out, and you got to tell everyone you know to reach out and let them know that you support the fair tax and you want them to take a real look at it and bring it to the entire House floor for debate, and that their next vote in office depends on them making that decision in your favor. You need to be that explicit about it, because it's the same thing that I said earlier around inspiring the right behavior. When it comes to an employee, you inspire behavior through compensation. It's one of the best and most effective ways to do it. What does every congressman or woman want more than anything else? They want to be reelected. So you got to hit them where it hurts. And you say, you support this, and this is how you need to support it, or you're not getting my vote. Period. And if you don't live in one of these districts, then what you can do is contact Chairman Dave Camp, and he's the chairperson, and you can let him know the same darn thing. All right? All right, so that is the special topic, and I'm just actually going to flip back because there was, oh, here it is. there's a handful of websites here that are really, really valuable resources. Fairtax.org is the official website of Americans for Fair Taxation, the official website of the Fair Tax founding group, and where all the support is and where all the funds that we raise go to continue our education campaign. flfairtax.com is, again, the Florida Fair Tax Educational Association, which is formed here in Florida, and that is just a number of really dedicated people that, and all of these are, but certainly I know a number of the folks in the Florida Fair Tax group, and that's a really valuable website as well. Fair Tax Nation is a social networking site with great information. Popbox.org is a great website as well for fact-checking and getting some great information as well. So I'm just going to leave that up on the screen, and then what I want to do is now I want to go back to questions. We've got a bunch of questions that have been written in, and so I am going to bring this up, and I want to hit questions again, and we will get your questions answered here in the next 10 or 15 minutes or so, so stay with us, and thanks for staying with us tonight. All right. Let's see. A number of questions asked about the debate between Neil Bortz and the counterpart in the Fair Tax. They want to know, is that going to be televised or streamed on the internet? I don't know that. Larry, do you have any additional information on that?
None whatsoever, Mark.
Okay. Well, there's something we can Google, and then if we get information on that, we can certainly get it out to you, John, and the others that are asking about that. Okay. All right. Let's see. Rick asked the question, my current state that Rick lives in, is nearly bankrupt and surely is corrupt, as is Rick's opinion. How can the federal government ensure the state governments deliver the collected fair tax to the federal government as expected? Larry, any thoughts on that?
Yeah, I've got lots of thoughts, but there's no solutions. Listen, if you have a corrupt government, it's just going to be a matter of time before the federal government finds out what your state government is doing and throws a whole bunch of them in jail, or you as voters in that state decide to impeach those rascals and get them out of there. Corruption is corruption. It's a natural part of life for some reason, and it's just a matter of catching those people who are not playing by the rules and making them pay the penalty for it. Mark?
Yeah, okay. Sorry, I'm just reading some duplicate questions, some observations being made. All right. And this is a good point by Dave Leake that just goes to the last couple of questions or points about the prebate. He says states won't be involved in administering or enforcing the prebate. They'll be collecting and forwarding the fair tax. Prebate enforcement will have to be handled at the federal level. Most likely, Social Security numbers will be required when filing for family size. Good point about the prebate. Thank you, David. All right. David asked a great question. Realistically, how large of a grassroots movement do we need in order for Congress to take action on the fair tax? Larry, you've got a good answer for that. I'm putting you on the spot.
Yeah, you are, and I was being interrupted here and not paying attention again. You want to give me that question again, please?
Yeah, David asked, how large of a grassroots movement, for example, in a district, do you think will be required in order for Congress to take action on the fair tax?
Got it. The target is 3,000 active fair tax supporters. We know that the number 3,000 would be magic when it comes to affecting the outcome of any congressional district election. So if we've got 3,000 members, we've got it pretty well made, because we know then, and the congressman or that particular person knows then, that their job is at stake if they don't comply with our desires for them to support the fair tax. Mark?
Yeah, thank you, Larry. All right. Ivan asked a question, and his question is, and Larry, I'm going to pass this on to you. Would yearly town or school taxes fall under new goods and services so that we would see those taxes rise by 23%?
Boy, oh boy, oh boy. We got the guys from Mensis here tonight.
I know.
Would the taxes themselves would not be taxed. What I'm trying to think is, will the service provided by the school be taxed? No. No, the tax on government would only be on items that the government consumes itself that is not used for providing a service to the public. So school is a service to the public. That is not going to be taxed. And if we think about it, education is not taxed either. That's one of the big points of the fair tax is one of the two exceptions. Used goods and the cost of education is not taxed under the fair tax. Mark?
Yeah, great points. Thank you. All right. Russ asks a question, how about a real estate investor who has years of depreciation write-offs, then sells the property? The federal government was expecting to recoup capital gains taxes on the sale. Now it won't be able to, correct?
That is correct. That's a windfall for that investor.
That's a windfall for the investor. And on the opposite side of that, on the federal government side, I failed to mention, and I'm glad this point was brought up to remind me, the fair tax was written in a way to be revenue neutral. So when they calculated the number of 23%, it's basically that times the gross domestic product in terms of what is spent on goods and services. From that perspective, the number 23% was derived in order to achieve the equal amount of revenue that the federal government raises currently pre-fair tax, which is a whole lot of words of saying fair tax is going to collect in the first year the same amount of money that it collects right now to operate itself. And then the good news for the federal government is as the economy expands, because of the fair tax, they will bring in more money. So, all those nuances, Russ, loss on potential capital gains taxes, things like that, all those details, all those nuances have been taken into consideration when creating the fair tax number of 23%. Now, what the fair tax doesn't specifically ward against is spending. The fair tax isn't legislation that reins in government spending. I mean, that's a whole other animal that we can talk about. And a number of questions we've had in the past is, with Obamacare and the cost of health care and, the stimulus packages, et cetera, does that mean that the fair tax number is going to have to go up? I don't know that answer, but certainly the fair tax was figured on numbers prior to the record government spending that happened in 2012. So we shall see. But anyway, that's a long answer to your question about real estate investment depreciation and lost capital gains taxes. Hopefully that answers your question, Russ. All right. Another question from Russ. How does the fair tax relate to Social Security funding? How does the fair tax relate to Social Security funding? It really does not. Larry?
No, that's correct. The way Social Security funding is going to be done, it will be funded by part of the 23% that's being collected nationally. And in order to ensure that the funds for Social Security and Medicare and the other entitlements are getting exactly what they're getting now, is the legislation is written so that the exact percentage of the total revenue that's collected now is what is defined to be collected and issued under the fair tax. As far as how the funding or how the benefits are achieved, once a year, your employer, or if you're self-employed yourself, will submit a form to the Social Security Administration and will be reporting the gross income that you received for the year. that gross income number is what will be used to calculate your benefits when you are ready to receive them upon retirement or whatever other case you might have that warrants Social Security. Mark?
Yeah, perfect. All right, James asked a question, is Ron Paul behind the fair tax, or how powerful is Ron Paul for this action? Not very powerful. I don't know his exact position, if he's ever actually come out and said publicly if he would support it. Has he, Larry? I don't know.
Ron Paul is not a co-sponsor of the Fair Tax Act, but he has stated on more than one occasion as a congressman, which he's not any longer, that he would vote for the fair tax if it came to the floor. His logic to that conclusion is that the fair tax brings him closer to what the Constitution calls for and what he desires than any other proposal that is being offered. Mark?
Yeah. Yeah, thank you, Larry. Incidentally, I just want to backtrack. I mentioned the websites, and my colleague David helped me out here. PopVox is not a fact-checking website. The PopVox website that you see is where you vote for the fair tax and then can send a message directly to your representative's iPad on the floor of the House. So thank you, David, for correcting me there, and that is a valuable resource to communicate for that purpose. All right, let's see. This question is from James. What tax reform is the government and the president talking about this year? Good question. Larry, any idea?
Well, yeah, I know they're talking about all kinds of tinkering around the edges and going to some form of a flat tax, and that's why we are so anxious at this time to be sure that the fair tax gets a fair shot for discussion on the floor. Nobody in Congress or the White House wants to give up the ability to really manipulate us for money. And if you think about it, as long as the 16th Amendment is in place, Congress can initiate small bits of legislation that will take tax in increments from somebody, whether it's a capital gains or whether it's an inheritance or anything else that they can dream up. As long as they have the ability to address income and tax income, they can get it from very, very many sources. We want to discontinue that, and the fair tax is the only thing that will do that. Mark?
Mm-hmm. Good point by Wayne. There's a lot of conversation about the prebate earlier tonight. When you submit your request for the prebate, you will need to list the Social Security number for each member of your household. The state will be easy. It will be easy for the state to verify those Social Security numbers, and you being used only once. So, as a result, fraud should be relatively easy to identify. Thank you, Wayne. Good point. All right. Does the 23% fair tax include local sales taxes? No, it does not. It does not include the state taxes either. And so state taxes and municipality or local taxes are all separate. But however, interestingly enough, there's a handful of states that are taking a real leadership role, and they've taken the concept of the fair tax nationally and applying it to their state. And they're considering repealing a state income tax in exchange for implementing a state sales tax. And so that is happening in a number of states. But no, answer, Terry, it does not include local sales taxes. All right. And David wrote in a good point. We were talking about President Obama and what tax reform they stand for. The Libertarian candidate in the 2012 presidential election, Gary Johnson, who was the former governor of New Mexico, Gary is a staunch fair tax supporter. He has it on his website, and he would be a brilliant. He's a brilliant advocate for the fair tax, is what we should say. So look up Gary Johnson if you'd like to know more about him. All right. A question from Yale comes in. Could you elaborate on education? For example, books, purchased equipment by a school district, etc. I think what Yale is getting to is what about education is exactly exempt from the fair tax. Larry, do you wanna take that?
Right. The tuition and any fees that you would have to pay for labs or other services like that are not taxed. The books you purchase will be taxed as they are a retail sale. Also, the books you purchase that are used would not be taxed. Mark?
Okay, perfect. Larry, why do the national media totally ignore the fair tax movement? I would think that this would be at the top of the news every night, asked Roger.
Listen, if you know anybody that has the answer to that, you know an extremely valuable person. I don't know. I can't read the minds of these people. I mean, we hear the pundits, the conservative pundits, talking about the mainstream media and how they're so biased and how they're in the back pocket of the White House and so on and so forth. You know, some of that is obviously true, but I can't say that I believe it's as bad as it is purported to be. That said, I do not have an answer for that question. And if you find anybody that does, you got a very valuable person in your hands. Mark?
All right. Edward writes in, the fair tax is not fair unless it has a component that protects money which people have saved from their wages and gains and already pay taxes on. And now again will have to pay taxes when it is spent. Does the fair tax proposal offer vouchers or some other protection to those spending from existing savings that have already been taxed?
No, it does not. But there's other counterbalancing factors here. First place, those people who have been saving and paying tax on their savings, I guess as I think about it, they weren't very smart to be saving in a taxable vehicle anyway. But that said, they are still no longer paying the taxes that are embedded in the goods and services that they purchase. So they've got that benefit. Secondly, is they are qualified to receive the prebate, which means they're not taxed on the first 23% up to their family size of household spending. The third thing I want to add, and it's not something that is really spoken of much, is that there are going to be some severe tax increases in the near future just to support the increase in people for Social Security and Medicare entitlements, the baby boomers. None of the tax proposals address that directly. And so that little bit that the people who have saved in the past are going to be paying in taxes when they buy stuff after they spend their 23% worth is a small contribution compared to the benefits they're going to be getting under the fair tax with the economy growing like it is. Their investments are going to do a lot more for them, and the profits, the gains on their investments will not be taxed. That's another element. There's no capital gains tax, so when they make a sale of their investments, they're not going to be taxed on them. Mark?
Yep. That's it. We've done it, Larry. We've cleaned the slate, and I want to really thank everyone for a lot of great questions, really pushing Larry and I to the brink, and we're going to do a little more studying on some of those nuanced questions that you asked, so thank you for that. And we want to thank you for your time, and more than anything, we want to challenge you. We want to challenge you to go beyond this simple 1-hour education that you'll absorb maybe 10% of by the time you wake up tomorrow, and come back next month. But when you do it, come back with a friend, just one person. If everybody took responsibility for coming back next month, A, you'd get more educated, and B, we'd educate one additional person that is ignorant right now of the fair tax. And that's really how we can do this, guys. So do that. And then also we want you to go to fairtax.org, and we want you to communicate with your elected official that fair tax is your issue, and if they don't support it, become a co-sponsor and get behind it and influence their peers, then they're not going to get your vote. So email, write a postcard, fax, call your elected official. Don't just do it once. Set yourself a weekly reminder and do it every week. That's the challenge. So be here with the guest, continue your education. We thank you for your support. I thank my colleague Larry for all that you do and for your wealth of knowledge and information. And we wish everyone a great evening. And we will see you back here on the 4th Thursday of March. Have a great night, everyone.